started on DLF Gardencity Enclave, Sector 93, Gurugram. Thank you for making time to watch this video. Before I begin, I want to set one expectation up front. This is not a sales presentation. You can get those from any broker on any golf course road, golf course extension road, or for that matter, Dwarka Expressway. This is a decision presentation. By the end of it, you will know exactly where this property makes sense for you or not. I have no financial relationship with DLF. I earn nothing if you buy. I earn nothing if you don't. My job is to make sure that a rupees 2 crore decision is made on complete information. So let us begin. The question here is whether you should buy or you should wait. I'm going to give you a specific answer, but only after we have gone through 5 things together. Let me draw attention to the 4 numbers on the left side of the presentation. Uh, 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 Somewhere here. So, the price is today at around 12,200 per square feet. That's the median price as we sit in May 2026. It has 213 plus active resale listings. Yes, there are a number of repeated listings as well, but roughly 213 plus active listings, uh, about 3.4% year-on-year appreciation. That's how much price has moved in the last 12 months. And as of and August 2027, that is the current RERA expectation date for phase one completion. Brokers will show you the first number. They rarely show you the other three. So that is why I'm here to give you complete information. When you come to today, so we are going to answer these 5 questions in a sequence. The question number one, what is the property actually worth in May 2026? No brochure price, real clearing price. The second question, when will the possession happen? And not what the sales team promises, but what the Haryana RERA actually says. Then question number three, what rental yield will you actually earn? Not net, gross, realistic, not aspirational. And the fourth question is supply tight or are we being artificially rushed into a decision? And fifth number, what is the story around the metro, the infrastructure? Is it still speculative or are there any concrete things? 5 questions, honest answers, then you decide. I'll tell you upfront on some of these, the answer is very positive, on others, it will be uncomfortable. That's the point. Now let's get started immediately. Look at the photo on the left. That's an actual unit in DLF Gardencity Enclave, unfurnished, white walls, marbles, no modular kitchen, no interiors. DLF is providing that in certain units, but not in all the units. Budget separately for fit outs, typically around 10% of the property value. Now the pricing table, the honest market range for a 3 BHK standard floor today is about 1.85 to 2.05 crore. Premium and corner units go for up to 2.5 crore. Also, 4 BHK floors start at 4 BHK floors start at roughly 3.15 crore, go to 3.48 crore. Uh, now the red, now the overall red flag in this is that some channel partners are quoting 1.30 crore as a starting price. That is the 2022 base price. The original booking price from 3 years ago, it's not the real 2026 acquisition price. Other brokers are quoting somewhere between 19,000 to 22,000 per square feet for premium units. Cross-check that against actual uh, portal listings, real transacted PSF site sits between 11,500 to 14,000 at max. If anyone quotes you a number outside that band, ask them to show your registered sale deed. The honest number is 12,000 to 12,500 for a standard 3 BHK. This is your negotiating anchor. Rental income is expected to be somewhere around 42,000, I would say 500 to 45,000 per month for a 3 BHK once the possession comes in a couple of years, and that boils down to roughly 2.5% of the acquiring price on an annual basis. So you can think around what it is looking like. Next, let's go to the price trajectory. Overall price trajectory Let me show you full price story from beginning to today. At launch in August 2022, the project was priced at roughly 9,200 per square foot. Total ticket for a 3 BHK approximately 1.35 to 1.40 crore. By the end of 2024, per square feet had climbed to about 13,000. That is real verified appreciation, roughly 40% in 28 months. That's the good news. Here is more nuanced part from mid 2025 to May of 2026, which is mid of 2026. The last 6 months per square foot has moved from 12,250 to roughly 12,200, essentially flat. And that is also the story of most of the general Gurgaon market. The 25 to 30% annual appreciation that early buyers enjoyed, that phase is nearly over now. The next re-rating of this asset depends on two events. One is receipt of OC, and which is expected by August 2027, and Gurugram Metro coming in, which will make this place really accessible and nearby a lot of places. First parts of which will be visible and operational perhaps mid to late 2027. So those are the two big appreciation cascades that will happen. If you're buying today, you're buying for the home, not for a quick flip, then this might be for you, which I will talk about in the next slide. So when you go to uh, possession reality, how has it been coming up? This is the most important part. Perhaps I want you to read the header very carefully. Delayed, partial, and still pending occupancy certificate, and that is primarily, on account of COVID, etc. Phase one of this project was originally promised in August 2024 to August 2025. The current RERA registered deadline is August 2027. That is 1.5 to 3 years slip in the original commitment. Now, while it is fair, that is not expected from a builder such as DLF. They could have very well promised slightly longer timelines as well, but seems that they were they were not up to the mark. Also, as of December 24, the last public disclosure, DLF has applied for occupancy certificate for only 19 out of 97 phase one plots. That means roughly 80% of the phase one buyers are still waiting for OC as of today. Phase two possession is committed for October 2028. Now the completion com now the compensation question. Someone always asks, won't DLF pay penalty for delay? And to be honest, DLF's track record on NCDRC and Supreme Court orders for other projects like Capital Greens, Valley, uh, uh, Panchkula shows token compensation of around 5 to 10 rupees per square foot per month. On a rupees 2 crore flat, that is going to be 750 to 1500 a month. It is not meaningful financial protection. Do not rely on it. Here is the important counterpoint. There is zero debt and zero litigation on this project. This is not a stall project. DLF will deliver. The question is when, not if. Before you sign anything, go to Haryana HaryanaRERA.gov.in, search for the RERA number of this project, which is going to be GGM /603/335/2022/78, and read the current registered possession date yourself. Don't take anyone's word for it. Going to the next part, well, inventory and urgency. So are you sort of being rushed into it? I want to spend a moment on the number that I have more revealing than any price figure. 213 plus active listings on 99 acres. Again, these are same units being listed by multiple brokers. That is something we understand, but there are more conservative platforms like Square Yard, where also you're looking at 71 listings overall, 36 plus owner direct listings on no broker, and sold out signals across. There were no sold out signals anywhere. I know a lot of people just post a listing, but then don't modify it, don't change it, which essentially might result in inflated numbers. But you need to understand one simple thing, that if there is high demand in a project, people keep calling because of listings, and portals also stop showing listings after a while. These are active listings just made in the last quarter. So the number is significantly high, which means there are quite a few people who are trying to exit this product for whatever reason. One of the reasons might be that this was launched at the peak of Gurugram market, and a lot of speculative investors might have got into it who do not have ability to pay subsequent amounts now that the possession is coming in hand. So that might be one of the reasons. What you will see is hundreds of listings, multiple sellers competing for your attention, several ads using phrases like motivated seller and urgent deals. The urgency in this market is not on the seller side, not yours. Many of these sellers are investors who booked in 2020-23, as I already said. They are now carrying EMI pressure and want to exit before the OC because they'll have to otherwise get a significant amount to have their properties registered. Uh, I'm because of all of this, I can tell you that you can negotiate a 5 to 8% reduction below asking price on a resale listing on a resale listing, and that is realistic. Seller paying EMI on the undelivered flat will often accept that kind of a thing who would have initially booked it. Never let a broker manufacture urgency when none exists for you. Now going to the next part, which is um, let us look at the infrastructure around the region. What has already been delivered, what might not come that easily, what is as of date in progress, because brokers tell you a lot of story. Things that don't even exist on paper might have one single media report. Brokers start talking about it. So uh, let me separate the delivered infrastructure from the pending infrastructure. There are two very different things. So delivered, and that is genuinely significant, the Dwarka Expressway, full 29 kilometers, 16 lane corridor, including Delhi section, is operational as of August 2025. It is live, signal free to IGI airport in 25 to 35 minutes. That's not speculative anymore. It's daily reality for residents. Pending the Gurugram metro, again, construction is real. About 5,452 crore have been sanctioned over a lot of 900 pillars are being casted. Trial runs targeted for early 2027. I will say that, as with all projects, do expect it to get delayed by at least a year or two. But there is critical, expectation that this will get happen. Mm, uh, what you need to know, no metro station is there in and around Sector 93, which you would already be aware of. If you're looking at this video, the nearest planned stop is at Sector 101, which is about 8 kilometers and 10 to 12 minutes, given that most of the route will be, signal free. The only critical caveat is that this area will have significant footfall or presence of people who might want to go to metro to, reach their adequate destinations. So expect certain traffic in the morning. That is feeder access will be required for this. You can't just walk to the metro, but that should also be fine. But don't expect to pay metro premium or anything like this. Then there is Patoli road widening, which is ongoing. There is certain short-term friction which is being resolved, but that's not should not be a deal breaker. Bottom line is that expressway thesis is real and delivered. The metro thesis is real, but quite a bit away, and sort of likely to take a good amount of time as well. Okay, which brings me to the next part. There are also additional options around here, and I'm not suggesting you should buy them, but you should do some sort of comparative analysis to understand whether which is good for you, which is not. So within the similar format, there is Signature Global 93, floor format, same as DLF, but density is 107 units per acre as compared to 43 units per acre of DLF, and the other two nearly 2.5 times denser. Price is lower, yes, 1.32 to 1.85 crore for 3 BHK. If budget is a primary constraint, Signature Global comparison makes sense for you, but you give up the UDS advantage, the basement asset, and the DLF brand moat. Ashiana Amara is another high rise which you would have heard of very frequently, which is in the same sector, positioned as a kid-centric community. Again, structured. So it has quite a good play areas, etc. Expected to be between 2.14 to 3.67 crore. Again, this is not in My1 construction. The biggest advantage of DLF is Gardencity Enclave is that all the units are My1 constructed, others are not My1 constructed. Yes, BPTP Estolia is a mixture, but again, not the best place. Ashiana has kid-centric values, etc., which might be something you'd want, but but again, the price is one of the biggest constraints. Then you might have to look for the other two. BPTP MS Tolia, again, BPTP used to be a good builder, but no longer. They're struggling a bit. The most interesting comparison for buyers who are tired of waiting, it is a mature, low-rise community with OC secured. Units available right now. Price ranges anywhere between 2.35 to 5 crore. You pay for occupancy certainty, not for future potential. But DLF Gardencity Enclave wins decisively on brand, USD, basement utility density. It is right property for a privacy first family. It is not the right product if low price or immediate occupancy is your main criteria. So that's how it is. It is structured. Moving on to the next part. Well, I want you to understand this part very clearly. What are the strengths and what are the exact risks that you see here? Um, mm, um, so I will not talk fast through the risks. I will go through each one of them. Well, strengths are real. DLF brand is a genuine moat in NCR real estate corrections. DLF projects hold value better than most others. Zero debt, zero litigation on this project. That is exceptionally rare. The My1 construction quality, that also means a near zero external maintenance for decades. D the deaded basement per floor is a feature that cannot be replicated in any high rise, and 35 to 55% cumulative appreciation from launch validates the location thesis. Well, no risk uh, uh, is equally rare. Possession is delayed 1.5 to 3 years from the original commitment. That is high rated risk, and you should wait for just before the OC or just before just by the time the superstructure is created for almost whichever unit you are trying to buy. DLF compensation has been generally low, 5 to 10 square feet rupees per square feet per month. So do not hedge your activities on that. Yes, there are quite a few active listings. The location is in a far off place, although near by a couple of highways and all, but metro thesis does not work on it. Gross rental yield is also expected to be no more than 2.5%, which is sort of unattractive for investors getting in at this time. End users might still like it. No metro station in 93 or this. So we have already talked about the metro thesis, Pataudi Road, access friction, short term Wedding is ongoing. There are some legal disputes, but they should be resolved. And yes, brand premium stands at about 2,000 rupees here, so you must be mindful of that. Then there is the decision matrix: buy now or if you must wait. So if you're an end user or for self-occupation, yes, this micro market, you need to watch it carefully. Phase one occupancy is now progressing, so the price is likely to go up after that, but this is a fair enough expectation at the moment. You can buy it if you are an end user or self-employed multi-generation family. uh, so because there's dedicated elevator per floor, single level living, peaceful green belt, no better product in sector 93 for an extended family living. And negotiated resale deal, given that there are so many deals, 5 to 8% decrease in price should be expected. The current quoted price is also reasonable, and possession is in some time. There are attractive payment plans. You can negotiate it around. Who to wait? Well, investors should wait because 2.5% gross yield does not make any sense. Uh, the short-term resale in less than 2 years is also unlikely because there are a lot of listings, and market we know has sort of gone into correction phase. And last is first-time buyer who are cash flow constrained. Well, you will have to pay EMI for significant period till such time as the possession happens. So you'll have burden of your rental as well as this. So be mindful of that. If immediate occupancy matters, go for BPTPM Estonia, uh, um, because OC is secured. But that is the situation as is today. The million-dollar question, uh, what are the kind of profiles that should consider DLF Enclave? Well, end users with 1.95 to 2.2 crore budget and who want DLF quality, who want My1 quality, they should go for it. Long-term investors, well, they should consider it. They should also couple it up with other projects and consider it 2.5% as of date is low, but with the kind of payment plan you're getting, it might become attractive. And short-term flippers, well, there's a no-go. Almost every project as of date in Gurgaon market is a no-go for short-term flippers. Pricing, we've already talked about it. You can negotiate it down to 12,000, a little bit lesser also if you're smart to work around with this. RERA today says possession in August 2027. Well, remember that there is one more extension which DLF can seek under this, so that should also work out for them. Supply is significantly high, and re-rating triggers like 2027. There will be certain milestones like metro, Patodi Highway opening, possession, etc., which will help you increase the price that is directly connected with the long-term investor thing, which brings me to the last part, which is that in case you want any support, uh, eh, you know, uh, like a 30-minute advisory call. We are there to help us. We pull the live Haryana RERA filings for specific units you are considering. We verify the current registered possession date. We run a basic title chain check. We tell you whether the seller's asking price is fair based on comparable transactions. No commitment, no obligation, no commission from DLF. If you decide not to buy, we will tell you why and what to watch for to know what the time is, when the time is right. If you decide to buy, we'll structure the negotiation, flag any unit specific risks, and make sure the paperwork is clean before you hand over the token amount. Number is on the screen. Call, WhatsApp, or email, whichever is easier. I'll close with one thought. In a market with 213 sellers and one buyer, you you are the one who is in the driving seat. You are the one who has the real power. So take the time you need, make the call when you're ready. Thank you and have a wonderful day.